Hello, friends. This is Jairam Sridharan from Piramal Finance, and I want to share with you today my quick take on what this budget means for you and me and for the Indian economy. The budget in India is usually a very extensive document, goes on to hundreds of pages, lots and lots of information and data, and hundreds of pages get written about it in the newspapers the next day. TV channels are full of it. So there's a lot to process. What we are going to try and do today is I'm going to try and break down 10 big takeaways that I think make sense for all of us. Try and bring it down in simple everyday English to make us understand what this budget has been about and what the big themes are. The way the budget is structured, as many of you might know, there is the expense side. What is the government going to spend money on? There is the revenue side, which is how is the government going to get the money? And then putting these together, there is the total consolidated statement. Here is how much money I'm going to get in. Here is how much money I'm going to spend. And net, what does it mean in terms of am I spending more or less than what I make? That's what the budget is usually. So a lot of time gets spent on the expense side. Where is the government going to spend money in this coming year? I'm going to take down the top 10 themes of this budget, and of those 10 themes, 6 of them are about where the government is going to spend the money. So let's jump right into it. Number one, the government is saying that I'm going to spend a lot of money on infrastructure. This has been the biggest theme in this year's budget. Infrastructure spending, the government has said I'm going to increase it by 33% from last year, and it is going to be 10 lakh crores. Now, the previous year, government had increased infrastructure spending by another 32%. So it's been 2 years now of successive, very large increases in infrastructure spending. So more roads, more power plants, more airports, more ABC, right? That's what the government is going to try and do. With this 10 lakh crores, it's a very, very large number. 3% of India's GDP is going to go towards infrastructure. This is the second highest level of infrastructure build of all the major countries in the world. Only China is bigger than this in terms of the amount of money the government spends on infrastructure. So a welcome change in India, a big amount of continued investment in infrastructure. That's theme number one. Number two, Pradhan Mantri Awas Yojana. It's a very big, very successful scheme in Bharat, where people have made houses because they've got the subsidy from the government to make their homes. Pradhan Mantri Awas Yojana has been so successful. They've now increased, the government has gone ahead and increased the allocation to this by another 66% in this year. And that outlay is now 79,000 crores. Another very big boost to Bharat markets, to the housing sector, etc. Lots more housing subsidies can be seen. Low and mid income India can look to build more houses because the Awas Yojana is today bigger. That's theme number two. It's also part of how the government is going to spend its money. Theme number three is in the spirit of more infrastructure. The government has announced that we are going to open 50 new airports, seaports, helipads, heliports, etc. So connectivity in India, just trying to increase connectivity in India even further than what has already happened in the last 10 years. So the big push in building some of this connectivity infrastructure. That's theme number three. Theme number four is the big part of connectivity in India today already comes from railways. Railways are a very big part of how Indians go from one part of the country to another. The outlay for railways has been increased to about 2.5 lakh crores. Again, a very, very big number. Clearly the largest number that the sector has seen so far. So big investments and continue to make railways even bigger than they already are. So that's the other big way the government intends to spend its money. So that's theme number four. Theme number five is for small businesses. Small businesses have had, in terms of credit availability, a particular central government scheme which the central government uses to incentivize banks and other lending institutions to go ahead and lend to small businesses without security. That scheme was revamped last year, and in this revamped version, it has been given an additional corpus of about 9,000 crores. And the government is saying, or the FM was saying, that she expects another 2 lakh crores of credit to get formed for small businesses because of this. So that's theme number five, the increase in focus on credit availability to the small business. And number six, again, a small business story. During COVID, a lot of small businesses lost a lot of money because they had given security to clients to provide certain services, but then the services couldn't get provided or those goods couldn't get provided and the monies got forfeited. The government is now saying that I will come in and to all these small and micro businesses, I'm going to make good 90% of that forfeited money. So that is essentially another way to pump in some money into the small businesses of Bharat markets to make sure that those businesses are able to stand up on their own. So those are the 6 big themes on the expense side. Now, a couple of themes on the revenue side, how the government is going to intends to get money. The first one there, of course, is personal income taxes. All of you must have heard this by now. The tax slabs have been rationalized and we have gone to 5 slabs now, and the rebate limit has been increased to 7 lakh rupees. So if you make less than 7 lakhs a year, then you are not liable for taxation. A very big boost to low and mid-income, sort of middle class India in terms of simplification of the tax slabs as well as increase in the rebate amount. However, there is an important catch here, and the important catch being that you need to migrate to the new tax regime. As some of you might know, there are 2 tax regimes in India today, the old one and the new one, and it is optional for you to move to the new one. The new tax regime has lesser flexibility and it's a much simpler tax regime, but people have been hesitant to move to this new tax regime. What the government has done now is to make it much more attractive for low and middle income India to move to this new tax regime, because here your rebate levels are significantly higher. So many more people will be able to not pay taxes if they move to the new regime. So that's the big push for the new tax regime that has happened. So that's theme number 7. Theme number 8 is HNIs. So far I've been talking about middle class India and Bharat markets. A quick comment on HNIs, high net worth individuals. High net worth individuals, it's been a very eventful budget. A couple of things have been taken away and one big thing has been given to the HNIs. What has been given to the HNIs is that the surcharge on the highest tax bucket used to be 37%. It has been brought down to 25%. So the surcharge at the highest tax level has gotten lower. That reduces the tax burden on the HNI. That's what has been given. But 2 things have been taken away. What has been taken away? One, that if you're buying an insurance premium of more than 5 lakh rupees per annum, then on the incremental basis you're not eligible for some of the tax benefits that you were getting otherwise. Usually HNIs were using this benefit, that goes away. The other thing is, if you are getting capital gains from somewhere and you're using it to buy houses, today you could do that for an unlimited amount of money without any tax implications. Now the government has capped it at 10 crores. So it is only for the super HNIs, but still HNIs have gotten these 2 things taken away from them and 1 thing given to them. So that's the balancing act on HNIs, which is theme number 8. Now putting it all together, themes number 9 and 10 are about how the overall cash inflow and outflow of the government looks like. So number 9 is revenue. Let's talk about revenue first and then we'll go to deficit. Revenue. The revenue estimations, by and large, the government has been able to keep it intact. So they've done a lot of things. I said, I've spent here, I'll spend there, I'll spend more there. But overall, they've been able to balance that by getting the right kind of revenue in, and the revenue intake, without making any heroic assumptions about how fast the Indian economy is going to grow, they have said, I'll broadly be able to keep my revenue intact. That's number 9. What that results in is my final theme number 10, which is that on the fiscal deficit, balancing all of these expenses and these revenues together, the government has said that I'll be able to reduce my fiscal deficit to 5.9% in the next year. In the previous year, they had said that we will reduce the fiscal deficit to 6.4%, and it was announced today that we have indeed met the 6.4% target. For next year, the government is saying, I'm going to reduce it even further to 4.9% and that 5.9%, and that on a longer term basis over the next 2-3 years, I will bring that down to 4.5%. This is exactly what financial markets want to hear, that the government is going to be very disciplined and it is not going to spend too much money that it doesn't have. India is a growing economy, so you always have to spend a little bit more than what you have, and that's what the fiscal deficit is. But by bringing that down, the government is clearly showing that not just are they going to do the right thing from an infrastructure development, etc. perspective, but they're also going to be very disciplined from a money management perspective and bring the fiscal deficit, keep the fiscal deficit in control. This is a little bit better than what the market might have expected, and hence the final question that I have, which is an open question we'll all have to see, is does this reiteration of the fiscal deficit target and this budget math that the government has done imply that the government, the regulators might be able to start reducing interest rates a little bit sooner than what the market was expecting. The market has so far been expecting that October, November next year, the regulators might be able to start reducing interest rates again. But if the government borrowing remains in control as the government has promised, if the fiscal deficit remains in control as the government has promised, then it is indeed possible, dear friends, that there is a little bit of room available for some of those EMIs of yours to start reducing a little bit sooner than what you might have expected. So that's it, my friends. That's my quick take on what the budget means for all of us. This has been Jairam Sridharan from Piramal Finance. Hope you enjoyed listening to our quick take on the budget.